This week's Stocks to Watch segment is Daniel Flax, Neuberger Berman, Senior Research Analyst. We know about higher interest rates. Dan, that gives us multiple problems. That's why people have talked about tech being problematic, the NASDAQ maybe being more adversely affected by what the Fed's doing. You've got a lot of headwinds that you're bringing up for the results, too. So a lower multiple on slowing earnings growth, too. What are the things that are hurting the results, the actual fundamentals of tech right now?
Good morning, Joe. Besides higher interest rates, of course, there's a little more inflation in the system. There's cyclical headwinds. Let's not forget FX as well, which is really a transitory impact.
Supply chain?
I think supply chain, higher labor, higher fuel costs,
all those
the list goes on. Trade tension, absolutely. I think, though, if we step back and think about what's going on, the companies that are able to invest, to innovate, really to execute on their product cycles through this, I think those companies are going to emerge stronger as we get into next year and really look at the reacceleration of growth late next year and into 2024. So insofar as this week is concerned, we, of course, have Google tomorrow. Core search, I think, is durable. It is slowing in the near term and compares are difficult. But that is a very vibrant asset. There's a lot of innovation there. Microsoft, of course, they are a key partner in helping clients transform their infrastructure to really embrace this digital future. And I'll mention Amazon as well. And as they get back to more and more one-day delivery with Prime, I think that e-commerce business is going to reaccelerate, and Amazon Web Services is a very, very valuable platform to its enterprise customers. So pulling it all together, I think as we look through the balance of this week and certainly into the weeks and months beyond, cloud, e-commerce, and the build-out of the digital infrastructure remain healthy, even in the face of what are, of course, some cyclical challenges.
I guess, Dan, what I'm asking is all stocks get hurt by higher interest rates, so that's a given. What makes tech so attractive in the bull market is it grows more quickly than like legacy companies that we think of, whether it's consumer products or retailers or whatever else. So in a period like we're in right now, which could be months, it could be quarters, it could even be years, what sets tech apart positively during good times, does that remain a positive in bad times? They still innovate, they still grow more quickly, or does it actually hurt them more? Is it better to go with the staid, consistent sort of legacy companies? Which is it in a sort of a dull period? Tech is good or bad?
Joe, tech is good, in my view, even in this period, which is a little bit more challenging. And it's driven, if you look at their R&D, their capital expenditures, in the tens of billions of dollars annually for these companies, their ability to both manage costs as we go through this period, but or more importantly, innovate and really push ahead in terms of what their customers will find valuable during this period and after this period, those are really foundational to creating value for all the constituents in their various ecosystems. And so if they're able to do that, I think they're going to create significant shareholder value, which is why I prefer looking for growth opportunities even in this environment. It doesn't mean there aren't challenges, but we think the market ultimately is going to look through it as we get into next year and focus on what comes beyond.
Right, and the NASDAQ's down more than the S&P, for example. So maybe you've already seen a recalibration of what these companies are worth. So your top three in the companies that are reporting this week, Dan, you'd buy any of them on weakness? I
would buy all of them. I would buy all of them this morning. Google, Amazon, and Microsoft. And to your point, Joe, the market has been discounting quite a bit of this. And so what I suspect we'll see in the coming several weeks through earnings is the market will get a sense of what potential downside can be, and then as it looks forward to what the growth that can unfold, I think these stocks can be nice performers, certainly as we get into next year and think about what lies beyond.
Should be interesting, Dan. That's what we hope for. We'll see how these, and then there's the advertising component that seems important to most of these companies too, which is affected by all the other companies we mentioned and how their fortunes are. So thanks, Dan.
Thanks, Joe.